Okay, Samir Jasuja is from the founder and CEO of PropEquity, now joining us here to talk more about the details of the CAG report, the findings, and of course the recommendations. Samir, allow me to observe, and a lot of these recommendations that the CAG is saying, which seems so obvious. Having said that, you have access to so much data today, which is part of the CAG report, whether it is traces, whether it's Aadhaar, whether it's a PAN card. It would seem so obvious that these misses could actually be plugged very soon, and it's no secret that a lot of the black money also flows into real estate. Do you think it's actually the political will or the political intention which is not in existence at the moment, and the fact that real estate is a state subject as well?
Well, there is many factors that need to be considered with respect to the question that you're asking. Specifically, high net worth individuals and developers, they tend to create land owning companies or SPVs. These SPVs are specifically created just to buy land or just to buy real estate inside of them. Now, they don't have any income. They literally don't file any returns, because since they don't show any income, they don't have to pay any taxes. The purpose of creating such companies is just to hold the real estate in the company's name so they can avoid capital gains tax. So, for example, if they were to sell the company from X to Y, they would just transfer the company and sell the company and won't have to incur Stamp Duty Act. There is, as we all know, there's a lot of black money there, so the white value of the property can just be the company can be transferred at the white value of the property, and so there is no income tax whatsoever. So you're absolutely right. The CAG report does come out with these findings, and this is the reality of today. Unfortunately, the government has allowed real estate to be bought in SPVs. Certain developers buy and create a lot of LOCs because of the Urban Land Ceiling Act. They are forced to buy LOCs, and then that's how this whole business of real estate continues, which actually works towards non-payment of income tax or finding enough loopholes not to pay tax.
Hi Samir, looking at the recommendations which CAG has spoken about, whether it be really going ahead and uniting with ROCs to ensure that PAN transactions happen, or more of interlink between income tax department, do you think they're enough to really make an impact on the current situation, given that all of these recommendations are being taken by the government?
Just providing PAN cards and Aadhaar cards is not going to be a solution. The solution is going to come by the form of being able to disclose intercompany shareholding transfers as and when they happen, specifically when the company has no revenue in it and just holds real estate in that. And that can very easily be captured by just knowing the balance sheet of the company, which shows zero income, zero tax, and there is the company is moving from one shareholder to the other. In that case, if they make it mandatory to report the transaction and then link it to the pricing, the circle rates, and to the market value of the property, they will be able to get a lot of taxes, and just PAN card and Aadhaar card are not going to do the trick.
Take your point. You have to capture the intercorporate deals. Once again, the CAG recommendation seems so simple. At the formation of the company, there is a PAN number, that information flow which is not existing between the ROC and the income tax department. It's baffling that in 2019, this ROC and the income tax department don't exchange information with one another. But having said that, you talked about just this, but it still cannot solve the fact that, a lot of transactions that take place in real estate by corporates and by personal level too are done in black. You show and you book a certain amount and the rest is under the table. Do you think we should not bother with that, but right now just consider widening the tax base, and that could be another creature that could be dealt with at a later stage?
See, another interesting point that I'd like to make here is the findings of the CAG report are with respect to 2013-14 and 15-16. Now, the real estate markets really started to crash, and transactions slowed down, and we're down to less than 80% of what they used to be, say, in 2010, 2011 levels. So, A, transactions have reduced substantially. B, that yes, cash will always remain in the system when it comes to real estate, whether it's political will or whether there is this lot of generation of black money in order to save money and then in order to save taxes, and then that being parked in real estate will be the order of the day in our country. And unfortunately, there are loopholes that have got created over the last 60 years, and Mr. Modi tried to to cover for them, but unfortunately, you know what's happened. Demonetization has been taken so badly with respect to the entire country, and that in fact was a step in the right direction to curb black money in real estate. But unfortunately, it hasn't played out that well for Mr. Modi and the current government. They couldn't follow through, and now this problem with respect to black money in real estate will continue, and I don't think the government can do anything about that. Even if the circle rates are taken up, there are enough justifications that the seller can make based on current market prices and get away as such.
Correct. Okay, so let's see if anything is done with these recommendations at all. Like I said, some of the recommendations seem so simplistic that it's baffling. In 2019, the Income Tax Department doesn't exchange information with the ROC and vice versa. Samir Jasuja, always a pleasure chatting with you. Thanks so much for joining us with that.